I wish we had better markets to show you and our viewers to start us off. This is the most that we have been down in futures so far this year. I feel like we can pin it on Evergrande. The markets have been a little bit weak as well. We've got a fiscal cliff. It's kind of a little bit of everything, is it not?
Yes, good morning, Brian. I agree. We've got a full roster of issues here. I think it's going to be a sprint between now and the end of the year. I think we'll work through most of these, but you're absolutely right. It's not just one thing. There's Evergrande. There's the issues playing out in Washington, D.C. with the Fed and fiscal policy and especially tax policy. You've got sentiment, which has been declining in recent weeks. I think that plays into how events unfold in Washington, D.C. And then lastly, we've had this ongoing divergence between inflation and interest rates, which I think all of it adds up to a lot of mystery for investors. And it's a wake-up call that there's issues beyond COVID.
Yeah, and by the way, seasonally, it is, as we now know, the worst month of the year for stocks historically. Doesn't mean it's terrible all the time, but September is known as not only a month where we average a decline, but it also tends to be more volatile. You throw all this stuff on top of it, you get what we have right now, although we are still just a couple of percent off our all-time highs. Got to put that in there for context. I guess the key question then, Robert, is what do we do?
That's right. I think you're absolutely right. That context is important. This market's proven itself to be very resilient. If you tick through the issues that you and I just went through there, Brian, it sounds like something that would be a more significant decline. And as you noted, we're only down a few percent here. That could continue a bit. But I think most of these things resolve themselves. You know, when you think through each of these issues, a lot of them get back to that key point of, I think, sentiment. You know, Washington is not going to press forward in the face of declining sentiment. I think you have an environment where economic metrics, while they've moderated a bit, will continue to get better. And so I think while we might be running in place for a little bit here, the outlook for next year is still reasonably strong.
Do we need this? Do we need the market to show even a little bit of weakness? What's the stat our viewers now know? We haven't had a 5 or 10% decline in, over 18 months. It has just been this up mentality. And maybe it is a little bit of a healthy sort of kick in the tush that we got to remember. Stocks can go down. Headlines like Evergrande Group sort of coming out of semi-nowhere this morning. These things happen.
I agree. I think it's a very healthy wake-up call. You know, when I was going through the declines that we've had since we recovered the pre-COVID highs, while we've had a few declines, they've all been very small, and each one has been smaller than the one before it. So I think this is a good and healthy wake-up call that there are a lot of things going on, that markets can go down from time to time. And it's a good excuse to step back and re-examine what your allocations are, what your risk tolerance is, and to take that longer-term time horizon and think about, not just today, but how am I positioned for next year?
Well, we know how much cash there is on the, I hate the term sidelines. It's not a game, but how much money there is sort of sloshing around the world. And if our viewers watching or listening right now on SiriusXM, thank you, by the way, or to the podcast, if they are thinking about putting more money to work, should they wait until we get through funding the government, the debt ceiling, where this spending package may go? Or is it safe to put money in now? Dollar cost average, as you always do, maybe hold your nose today and this week and plow through it.
Right. I think it's usually not a good idea to wait, usually not a good idea to try to guess what reaction will be to these events. As we've noted here this morning, they're all out on the table and they've been somewhat digested here. So I think it is a good time to stay where you are, stay in place. I wouldn't dial back risk here. And I think if you have a longer term time horizon, it's a good time to start thinking about what's on your buying list over these coming weeks if these issues become a little bit more dicey.